What is going on, everyone? My name is Jeff. So back on Tuesday, Federal Chairman Jerome Powell, I feel like he made a promise to investors and traders, okay? He's come out and said that we will act appropriately to sustain economic expansion. And of course, what he meant by that, guys, was that the Fed is going to be meeting from June 18th to June 19th, and probably one of the things they're going to be talking about is actually lowering interest rates. And pretty much ever since that news hit, guys, the market has been in a complete reversal mode. As you can see here on the Dow Jones, guys, we have gained almost 1,000 points in just a matter of 3 days, really. Back on the 3rd, which that was Monday, the market closed around 24,700 points. And now here we are Thursday at close, and we're at 25,720 points on the Dow, right at 1,000 points in. And this really all stems from the news that Chairman Powell did mention that the Fed will do whatever it takes to sustain economic expansion. I'm gonna come out and say this. I know the big thing on everybody's mind, is it time to start buying stocks? Is it time to start going long on stocks again? And I'm just going to come out and tell you, in all my years that I've been in the stock market, this is by far the most confusing time I've ever seen in my entire life, because we simultaneously have two trade wars going on, one with China, one with Mexico. It does not appear like there's going to be any resolution with the trade war with China at this time. And then of course the trade war with Mexico, there's actually a meeting that's going on tonight, and apparently there's supposed to be some big progressions going on there. Again, nothing really solid to report, just some speculation. You know, we have an inverted bond market that has been being noticed since March, and of course it's 3 months later, it is June. So this is an ongoing problem, and I guess it's really hard to differentiate if this is a real problem that we should take seriously. Historically, it has been an indicator of a recession. You know, we are seeing economic growth slow down quite a bit. We're seeing it in earnings reports as well, okay? Companies are not cranking out the earnings they were 1 and 2 years ago. There's definitely been a slowdown in growth. And now you have the Federal Reserve coming out and saying that they are going to be helping out the economy any way they can, and most likely that means cutting interest rates. So when I say this is the most confusing time I've ever been a part of, I mean it. I think 1 hour you could be bullish on the market, and 10 minutes later you could be completely bearish on the market. So all I warn short-term traders, especially if you're playing options, weekly options, or if you're playing 1 or 2 weeks out on options, anything like that, I just highly suggest to be careful right now. And if you're unsure and yet you don't feel confident moving in one particular direction, I suggest just sitting out for a little while, okay? Because even me, I have 17 years of experience in the stock market. This is the most confusing time I've ever seen. I can handle when the market is going down, and it's noticeably going down. I can handle it when we're in a bull market and we're trading up. But there is so much mixed information going on right now, guys. It is incredibly difficult to really pick a direction and move in it. So you all know what to do. Make sure to drop a thumbs up on this video. Guys, I appreciate all the support, and make sure to subscribe to the channel if you've not done so already. Let's get started. So if you want a quick answer, guys, you want kind of a quick resolution, this is my personal opinion. I think we're going to see the markets trade back up at least until the Fed meets on the 18th and the 19th, kind of anticipating a rate cut, which again, I'm very torn on that subject, because when the Federal Reserve comes in and cuts interest rates, that's basically an admission that the economy is weakening, and it's not necessarily something you want to see in a bull market, okay? Which we really have not been in a bull market over the past month and a half. The market has been very bearish on news of the multiple trade wars and the inverted bond market. So this could change minute to minute and day to day. As we know, our tweet culture, our news type culture, where as soon as news hits, the markets can change on a turn just like that. It is really hard to forecast, but in my personal opinion, I do think the markets will be generally bullish going into the Federal Reserve meeting. If you are not comfortable and if you are not 100% sure about any trades that you are making right now, like I said, my best suggestion is just to keep your money in cash and wait off for a while until the smoke clears and the message is a little bit more clear on what exactly is going on. Now, what I want to talk about in the rest of this video is what all can happen from a potential rate cut. Obviously, it will give investors short-term confidence about buying and selling stocks, but it could create a very long-term painful situation as well. Okay, so traders and investors are begging the Federal Reserve for several rate cuts this year to salvage an economy they see set to slow significantly because of worsening trade disputes. Obviously, that is one of the many problems that we're having, and so that is why we've seen that big rebound. Obviously, we've already covered that. Now, one area where we could really see stocks get hurt is obviously banking, okay? Because large cap banks could see their earnings on per share basis decline by around 10% on average if the Fed lowers rates by 75 basis points. If you have all the large cap banks, your Citigroup, your Wells Fargo, JP Morgan Chase, Bank of America, if they cut their earnings by 10%, obviously you're going to see a huge dive in the stock price for all of the major banks. Now, bank margins could take a hit if they are paying out deposit rates at a higher level than market rates, right? So banks are really going to struggle to be able to make money, and of course make money at the levels we're used to seeing them make if interest rates are cut. Okay, their earnings are also hurt when the spread between short-term and long-term rate flattens, and that is a phenomenon that could worsen if the Fed cuts rates. So keep in mind, there's a lot of negative things that will come with this, but I do think we will see a short-term growth in the market just on the anticipation of a rate cut. So right now, while you are seeing the markets reverse and become bullish again, that's traders. They are pricing in more than a 90% chance of a rate cut in September and about a 60% probability of 3 more rate cuts later in this year. Bank of America's economists believe there will be 3 reductions by early next year, and now Barclays is now also expecting a 75-point basis cut this year, okay? Guys, now you're going to have to keep a very open mind here, but investors are also cheering for the price of crude oil to continue dropping because that almost forces the Fed to cut interest rates as the price of oil keeps trading down. So now you have to think one of the reasons the market is so bullish in this very minute is because oil prices are going down, which increases our chance of a rate cut. Okay, so like I said, very confusing, very difficult to wrap your head around. It's almost like good news is viewed as bad, and of course bad news is viewed as good, and it's very hard to keep all this stuff straight in your head. Over the past month, crude oil has got cut very hard, and it has traded down just with the rest of the entire stock market. And then really it traded kind of flat for about 4 days this week. Then we've seen a nice recovery today, but still over a 5-day stretch, crude oil is only up about 2.2%. It's right around $53 per barrel right now. So it's still very low when compared to a year ago. Of course, we did hit some big lows back in December as well. So back here in December, of course, that is when the markets really bottomed out. Crude oil got all the way down to $47 a barrel before making a really strong recovery into the first couple weeks of May. Got itself back around $62. And like I said, since that time has pretty much lost all of the levels it's made and has just seen a very small recovery this week. So this is kind of where I want to conclude this video. So keep in mind, with the interest rate cut, banks will suffer. And also, investors and traders and especially institutions are really cheering for the price of oil to keep dropping as we near the Fed's meeting on the 18th and 19th of June as well, okay? So let's ask this question again. Should you be buying stocks? And if you are a long-term investor, you have the long-term vision. Obviously, yes, anytime you find one of your favorite stocks heavily discounted, it would probably be a good time to buy more and cost average down. But now let's talk about if you are a day or a swing trader, or you play the options market a lot. I think right now might be an appropriate time just to pause and kind of scale back, maybe set your goals a little smaller, because to sit here and tell you right now with all of the confusing mechanisms that are a part of the market, guys, I would not feel right telling anybody it is a good time to either be buying or shorting stocks. It still feels like we have a lot of negativity that is not yet quite priced into the market either. Like I said, we have to hear what the outcome of this trade war with Mexico is. You know, of course, those tariffs can be getting delayed, and we'll know more about that this evening. But we are not anywhere near a resolution with China, and guys, this could continue to go on for a long time. So the fact that the Fed has made some uplifting comments and nothing has really changed and nothing has really happened yet, I do not find that as a strong enough signal to start buying stocks to trade just yet, okay? If anything, hold your money in cash until the smoke clears a little bit and the picture becomes a little more clear, okay? Anyways, guys, that's all I got for the video. Thank you so much for watching. Drop your comments down in the comment section because I would really like to hear all of your opinions on this. Thank you as always for watching, and have a great day.